The point is, to me, real estate's freaking easy because I look at this stuff and I go, I know what to do. Stocks, I don't know. So don't ever expect Meet Kevin to sell you a stock investing course. The point is, to me, real estate's freaking easy because I look at this stuff and I go, I know what to do. Stocks, I don't know. So don't ever expect Meet Kevin to sell you a stock investing course.
Oh shit. What's going on? Oh, what a day. Oh, I love it. I was out most of the day at families' houses, just enjoying football. What a glorious day. Meet Kevin just disappeared. So it's like, what the hell? Oh my God. It's been fun. And then I found this on Reddit. I had to I want to, there's credits to the guy that made it. You gotta love it. It's so true. Leave Brittany alone. Oh, anyways. I'm trying to consolidate. This video is kind of also, I want to preserve things I have in a video that I control, just in case. So I have stuff I've collected. So, I just want to, so I followed Meet Kevin like in 2020 from the very beginning of COVID. Okay. So I'm very qualified to talk about this piece of shit. So I'll start this might be a while. I don't care. I don't want to be. I'm not a grifter channel. Like I tell you, Chris might get back in a mood with Meat Breath. We'll see. But I'll just lay it out for this video, and then it'll be recorded for history. But I started following Meet Kevin in 2020. Bacon, can you hear me just to make sure before I don't want to lose this emergency live stream? Well, anyways, so I started following him in 2020 because I was just looking for stimmy check news. Honestly, I just was like, I just want to know when the dang stimmy check's coming. I'm working from home all day, 60 hours, so I'm bored. So he pops up 2020. So this is for people that maybe don't know all of Meet Kevin. Like maybe you're newer to him. So he literally and now it's all deleted. Like from 2020 through probably early 2021. Like he was just a stimmy check political news dude. Like that's all he did. He just did videos on like when the stimmy checks are coming. He didn't do finance updates. So that's how he made all his viewers and made most of his money at first. That was it. Political news. He covered January 6th. And then just when you getting your check from Uncle Sam. And then all of a sudden it was like, I'm watching this. I'm home. I'm watching this stuff because I'm just doing unemployment claims for the government. He just switches like literally to stocks out of nowhere. And it's like, what the fuck? Like I literally am following you just to hear news updates. So I don't have to go find it. And then he starts putting out, now we can't see him. I don't have a lot of his stock videos saved. He starts putting out like stock news, and then it was like he actually starts evaluating stocks. And I've been doing investing for 20 years. I'm not saying I'm like the greatest person in the world at it, but like I know a little bit. And then his videos are just like amateurish, but just mind you, amateurish in the way that he presents the company. He's a very polished salesperson. All right, like he's very gifted in sales and showmanship. So yeah, he's very convincing to someone like me. I'm just like, it looked like in a lot of his early like the Affirm one and some of the other stocks that he covered, it was like he just went online and saw how people evaluate stocks, and he just hit all those points. Technical analysis. He would cover the story. He built like a bullshit valuation tool. So he just like check marked all the boxes of all the people that may or may not watch his videos. And I could see it. I could tell. That's what he was doing. He was just trying to get the biggest audience possible to watch his videos. And everyone thinks he's a genius because all the stocks he's picking, because he picked the perfect time to pick all this garbage trash companies because they were all going crazy. So that's the beginning of Meet Kevin for some of you that don't know out there. So this is who you're listening to for investing advice. Okay. Now that clip I showed, now I have it. Scott Schaefer has it for posterity. There's some other hit piece YouTubers that have it. So that's now what that references is. He said that in 2019. So this guy knew nothing about stocks in 2019. He's selling you an investing course maybe 2 years later. Just think about that. Maybe 2 years later, he's selling you a full-blown investing course online. Like, I was trying to think 2 years into my investing journey, man, I was like, I still didn't even know what the hell a mutual fund is compared to a 401k and an ETF. And this guy's selling you investing courses that fast. Again, the salesmanship, the showmanship, he has it. He's good at that stuff. He can present bullshit and make you convinced because that's what he's good at. He's good at that stuff. So you guys want this is who you're dealing with. I mean, this isn't new. Echoes from above. This is how Chris started his channel, which is how I found Strongman, is that I was so enraged by Meet Kevin's Affirm video, which he called Affirm, which is just a payday lending company, which I don't even know if they're in business. Maybe they're close to bankruptcy. That was the one where you could buy anything in the world for payments. And he calls it like the Tesla of finance. He presented it. I couldn't find the clip while he deleted it. He literally talked about Affirm to Ross Gerber in a video. And Ross Gerber is literally telling him, don't buy this stock. These companies are trash. It's just the cyclical lending company. And if the economy starts to dip, these are going to get wrecked. And he still bought it. And then he made that pump video saying it was the Tesla finance. I really wish I had saved that. But anyways, so this is who he is. I mean, he's good at sales. And I'll tell you people, like, I'm a professional auditor. That's what I've been doing for almost 10 years, 10 years. I'm not going to say people lie to me. That's not true. They misrepresent facts. They give me half truths. They kind of beat around the bush. It's literally my job. People don't want to talk to the auditors. I'm coming to cause you headaches. So I'm pretty good at bullshit detecting. It's like part of my profession. Like, Kevin's always been a bullshit, like, detected person. Like, I couldn't believe that I just wanted stimmy check news from him. I couldn't believe when he started going into investing stuff. He has no idea what he's talking about. He was making stuff up. And he made it, right? He made a lot of money at that time. And then he got in with the right people at the right time, opportunity, struck. So yeah, pretty much. I mean, when everything's said and done, I think that's probably the most apt comparison. I mean, Kevin's the Wolf of Wall Street of YouTube. I mean, someday it's all going to come to a reckoning, I think. He made them private and he can put again wherever he wants. It's drama. Yeah. You never know with him. He didn't make the channel private, I know. So he'll probably bring it all back. I know he put announcements on his Discord. I see them. And then I think his channels have like coming soon. MeetKevin.com right now is like down and it's like coming soon, some new news. So I feel like recording. We can just go after him a bit. So this is one part. Again, we don't have the videos now because he's put them private. So I can only timestamp reactions of like Chris's videos. So this was to give people background. I'm pretty sure Slurpees knows this stuff. I saw your comment earlier. So just focus on the timestamp. So November 8th, 2021, he had $42 million portfolio. Now, we don't know. I mean, unless we had the videos to look at from them, but not all of that's his money. He had probably quite a bit of margin and borrowing in that, but that was his portfolio at the time, something in the $45 million range. This was the height of Meet Kevin that date. Okay. So Strongman has all this. You go watch the full videos. You can see the title. Go watch them. So here's look at the date. And this was about when he sold everything. So for people that are newer, he literally was bragging about his $45 million portfolio in November. By January, he literally sold his entire portfolio. And that was like a what the hell moment. Nobody in the world does this. Like, nobody sells all their assets like at once. So there's probably a lot of YouTubers made videos because it was pretty stunning just for someone to do this. And he won't admit it. Now I have a video later which will laugh, but I think he panic sold. What I think, if you go look at, you can see some of the holdings. Um, Strongman has it. So again, you could see like a lot of questionable companies he had at the time. So Peloton, oof, Redfin, Rocket. I'm not sure. Is this Segway? SoFi, so Square. A lot. If you were watching his videos, like he picked all these garbage companies. I don't know how I was afraid trash, unprofitable, share diluting companies, or highly overvalued growth companies. So what most likely happened is he started getting wrecked, because if you go look back at the timeline, that was when the market turned November, December into 2020 or into January, and then he sold it all. So most likely he got wrecked and he sold all of it. And then he made a video where he was like, this was his strategy all along. He was planning this for months. He was trying to say that he saw all the tea leaves with the Fed and he knew that the market would get wrecked at that time. So he was timing the market with his whole portfolio. But then that came unraveled because he literally started buying stocks like 2 months later. In March of 2022, he started buying stocks again. So again, it's none of it matches. If he was really waiting for something, 2 months at most. So that's all a lie. All right, let me look at some comments. We'll keep going. Kind of an emergency live stream, actually. I literally don't follow. I can't even remember last time I saw one of his videos. He's the cringiest thing. He's so cringy. I can't understand when I see people like smile and glorify him online. I'm like, you must not know his background, or you're just gullible. I mean, hey, the Wolf of Wall Street, right? They're believable for a reason, these people. Like even Sam Bankman-Fried, we laugh at him after he got caught. They're believable. That's why these con men are so good at what they do. Like they have a talent to captivate people and convince you that they're right. And it's hard to see through it. I'm not gonna say I see through every person, but Kevin just huge red flags with me. Investing God. Let's see. Yeah. Okay. Don't tell me how we make. Oh God, no. The day of reckoning. He's, it's coming, I think, at some point. Yeah, will I dye my hair green? Not gonna lie, it's low key. It could play, even though he panic sold the market. He's going down badly. Oh, he did not do well though, because I have a spreadsheet, so I was kind of tracking his videos at the time. So he did that. So then we come kind of the next thing, which is funny. So April 2022. This is another example of how incompetent he is at investing. He goes to what was it, Giga Austin's opening, and he goes through all the ceremonies and all the pageantry that Elon shows you, it captivates you. So if you're an investor, you would think, well, surely someone like him could look beyond that. But at the end of this video, which is deleted or privated now, he said he bought the stock. So this was one of the first buys after he panic sold his stock or his portfolio. So you look at the date, April 10th. So he literally, or April 10th. So see right here, like he literally bought at like the highest price it's been since then, because he just was captivated by Elon and the whole pageantry of Giga Texas. It was, I mean, I was laughing my ass off. It was such a like the fact that he bought after seeing that. After a few months earlier, he told us everything was doom and gloom. So nothing matches with his story. So house hack. Here's what I'll tell you. Like, look, do I think house hack's a scam or a grift or a con? Not necessarily. What it is a very speculative investment. So basically the way this is like a boom or bust investment. You give him your money, he's going to do his house hack stuff. Eventually the goal is to go public. If it goes public, the hope is you can then sell your piece of it and make a bunch of money as it lists on the, public exchanges. And if it doesn't go public, you probably will never see your money, because it says clearly in this filing, you have no rights to distributions at all. So you're not going to get a dividend, even though it's a real estate investment. There's no distributions, dividends, nothing. So either it gets publicly listed and you make a bunch of money, or you never see your money again. But that's, these type of investments are very speculative. So that's not like the scammy part. The only thing that concerns me is like, so now I'm putting on my auditor hat a bit. It's not like I've audited this, but this concerns me. A big part of auditing is internal controls assessments. So you do an assessment of the separation of duties of people that have part in the financial management of a nonprofit or a grant. And then also, who's got what responsibilities. You're making sure like one person doesn't control, like they don't have the checks, authorize the checks and write the checks, stuff like that. It's not as on my small nonprofits, it's not so complicated, but this is concerning. Ross Gerber's on the board of House Hack. He's also, runs Ross Gerber Wealth Management, and they control the cash assets of House Hack. So they provide cash management services to House Hack, but he's also a director on the board making decisions on investing for this. And I don't like that. There's no separation of duties there. Like, I don't think someone on the board should also be part of the cash management services. It's a conflict of interest to me. I'm not saying it's a crime, but it's a very concerning part of this. The other part, this is kind of a theme I noticed. Where is it? I think it was page 35. Okay, this is a running theme. We currently have one full-time employee, Kevin Paffrath. One full-time, so he's full-time doing House Hack. Okay, this is the theme we're going to see. We can go to other things he's with. Title. Let me get the page. I wrote it down. So this is related to his ETF, PP. Okay. I'm not saying any of this is a crime. So like, this is not like crime files. Oops, sorry. Manager. God, I can't type tonight. Okay. Kevin Paffrath is primarily responsible for the day-to-day management of this fund. Okay. So now we have another full-time job. Now, this is just for anybody that wants to invest in this guy. So now we have him doing two full-time jobs. It says in the filings. So he's running the portfolio, day-to-day management, primarily responsible for day-to-day management. It says it in the SEC filing. But he's also full-time, at the other thing, at the House Hack. And then we go to, here's his investing, finance investing service, Stack Hack, whatever the F he wants to call it. Okay, Plato's Philosophy is the company doing business as Stock Hack. Okay, so so these are like the filings to be an advisory service. So if we go, I found this funny. So his advisory service is providing the consultation services to Title to provide the day-to-day operation of this PP. So now we're at three businesses. He is 100% the full-time owner. He's the CEO of Plato's Philosophy. So here's three full-time jobs because you're the CEO. There's no part-time CEOs. So he has three full-time jobs now. So I found this funny. So this is what they get. This goes into the people suspecting, oh, he might be hard on money. Well, he's only getting 0.02% expense ratio on PP, which is about $38 million right now, or 32, I think. So I saw on Seeking Alpha, I think it was 32 million assets under management. At that percentage, he's only clearing like maybe 10 grand a year in fees, if my math's correct. So like, he's not making money. So this could go to people saying like he's hurting for cash. Like, he's not making money from this. So, and here's some other filings. So basically, so we're at three full-time jobs. I would be concerned if you were going to give this man money. If you're going to run House Hack, which is a very speculative, startup, if I was going to give you money, you better be running that thing full time. That would be my first question if I invest in something like that. Um, I'm like, you better be for full. Like you've seen Shark Tank. Mark Cuban will ask these people, like, are you willing? Like, is this your only responsibility? These startups, they'll ask them, is this it? Do you have another job? They want to clarify that this is all their effort. You're paying for the full effort of that person to get this company off the ground. I mean, we're at 3 full-time jobs here. So people, if you want to invest in this, that's what you're buying. A dude that is probably stressed out beyond belief. I can't even imagine how he's handling all this. So you're not getting his best effort, is what I would tell you. And you can say, well, he's got a bunch of assistants. I'm like, but the filings say he's the full-time person in charge of all of these operations. He's responsible for all of it. And he wants your money. Can you see through me? Oh my God. I'm dead. Set this video that he kept screaming, get to the point. It's the salesmanship. He wants you to keep watching. He's not giving you it. He wants to keep you engaged. Yeah. Yeah. Echoes. I know you've probably covered this, I'm sure. Yeah. Ross is on the board making decisions for the future of the business, and he also controls the cash assets through Frost or Gerber Kawasaki. All his money invested in treasuries. Yeah. Like if I was auditing them, that would be it would be something I would narrate in like internal control section. I don't like it. And like I've seen in other like I've had directors give contracts to like family members. Like it can be done. It's not always wrong. It has to be done in a certain way that's fair and open to the public. So like it just depends with auditing, but I was like, give me your money. I'm playing. So with house hack too, like I'm not a real estate expert. I've owned a few properties. Everything I've seen online from people that are in the type of space that Kevin's in, all I'll say is they always comment that like he can scale it. It's just, but you need to be in one specific area so that you're familiar with like how that area operates, where what the valuations are on houses. Because I mean, I'm sure people here know you could have a house on one street and then have another house a quarter mile away, and there could be vastly different neighborhoods. So you need to be in that area to understand those things. This whole idea of him jet setting from city to city, making deals, it just sounds totally unbelievable that he can make this work. And you can go, I mean, Zoom, that's what Zoom tried to do, right? They tried to do a nationwide house buying program. I know he's not buying and flipping. The idea is he's supposed to rent them out after they do these wedge deals and then use the equity that they earn from improving the property and then pay for like the next ones. This is all troubling though. I don't know why you'd give this man your money. It's the stream. Oh man. Echoes, I was going to show some clips from some of your older videos because it's hilarious. The old days. Like, so this, this is probably my favorite thing I have. I clipped this from one of his videos a while ago when I was watching because, so he swore in an interview with Echoes, I think I asked you to ask him, he swore that he doesn't trade stocks or do technical analysis or draw lines. He just made up this whole bullshit. I'm sure Echoes has its video. He was just like, no, I'm long term. Of course, here it is. YouTubers are always long term on stocks they invest in. They don't want to tell you the truth, that they're speculating. So he made up this whole grand story, and I had this saved. I'm like, he literally did options trading on this yellow line. He drew this yellow line. That's technical analysis. He drew channels, and as it went down, he got wrecked. This is the sign of wreckage, people, right here. So another lie. I mean, it was just ridiculous. Like he just, and who cares? He could have just admitted it. It's like, it doesn't even matter to I don't think anyone, but he can't help himself. And then this was just some random video he did. And this was after the DUI. He just decides, F it, I'm just going to do a video where I'm just going to start chugging alcohol, There it is. So I figure I'll put it in the thumbnail. If anybody wants to invest in him, I mean, he's a functioning alcoholic, I guess you could call him. I'm not going to say but he's admitted that he drinks every day to calm his anxiety. Echoes has that video. So there, I mean, who does this? And you're going to give him your money, or you're going to take courses from this man. Oh, I always enjoy this, but so that's that part. Other than that, I have some clips we can watch. I need to pull them up real quick. Present. Okay, let me get 1 second. Chrome tab. I confronted Kevin again. Okay. Are you in Echoes? You probably remember this. So I asked the question too. No, I got the date wrong. Don't kill me. It was 2022. So I got the date wrong. I was excited. So let's hear what he has to say. The question.
Okay, so the question is, admit you panic sold your entire portfolio in Jan 21. Well, he means Jan 22. And no, it wasn't panic. It was well, first of all, you have if you actually go through my videos, you can actually and people have identified this by actually going through those as like a learning tool. They'll go through my videos starting around Jan 5, 22, and you can start seeing my concern evolve. And it really started with the Federal Reserve becoming extremely aggressive when they realized that inflation wasn't transitory. That's when they U-turned. That was around January. That was around December 16th for the Fed, but we didn't know about it until January 5th. You could type into YouTube, "Meet Kevin, worst Fed report ever." It's a fantastic video. It's like
You can't find it now though.
a 55-minute live reaction, and you can see the surprise in me. So I do what I always do, and I do the same thing now, and then I double and triple down and I study. And so I must have read a couple hundred earnings calls in the span of the next 2 weeks, and I was absolutely convinced that we were on the path to a wage price spiral. I went to a JP Morgan dinner I was invited to, and a JP Morgan banker was there, and I said, "We're screwed. Like, this is horrible. Everything's about to crash miserably, and we should not get back into the market until the Fed U-turns."
Did you hear that? Did you hear that? He said we shouldn't get back into the market until the Fed U-turns. Okay. And I just showed he was buying stocks like 2 months after he sold his whole portfolio. So you see the wishy-washy, like the stories don't make sense. We're not even at the U-turn. You could argue we might be at the U-turn of the Fed rates because they paused it. They still might raise it. I wouldn't say we're on the downward trend. So he just said he was going to wait on the sidelines until that event, which hasn't even happened yet. Which is ludicrous to wait on the sidelines for something like that, anyways.
And a wage price spiral is going to take hold. And I gave them my data.
There's no such thing as a wage spiral, whatever he's talking about. Inflation hit us 9%. The economy did not crash. So there's another fallacy or whatever story he's making right now.
Data and sort of dates and everything. And I remember this person who actually used to work at the Fed, who now works at JP Morgan as some chief strategist or whatever. He's like, "Well, what's your base case for recession?" And I said 70%. And
70%, eh? 70%. Which is funny because he bought Tesla stock not even a month later after this. So he was saying he's 70% sure we're in a recession, spiraling in price. We're heading down this dark hole. But then he starts doing Tesla Rue videos, buying stocks again, like right after this. None of it makes sense.
That was in January of 21, or sorry, of 22. And he said, "Oh, okay, well, that's where we're different. We're at 15%." And so, sure enough, over that month of January, of all of these meetings and the realization that, oh my gosh, people don't realize this yet. I don't think it was panic. I actually think it was perfect. Nearly perfect timing. I mean, a few stocks could have been sold a little bit earlier. November of 21 would have been perfect. When I actually started shorting Kathy Wood, not because I don't like her, I actually love her. I just thought the valuations were high. But
I never saw him say anything about shorting Kathy Wood before this. I was following with the time. He's trying to cope. He's trying to like create this weave of a story that he didn't get 50% wrecked at that time with his panic selling up and down, and is trying to perfectly time ups, tops, and bottoms. No.
Anyway, that was ideal. But look, I didn't play it perfectly, but
So now here's more bullshit from him. So that's that. So it's like you could like it doesn't make sense like what he's saying, because the facts don't match what he told us in there. And oh, I'm sweating. So, oh, I'm sure I know you must have been, yeah, you were around that too. I think he did meet with bankers and they told him you're screwed. You're maxed out on margin right now. Kevin Twist thinking he's about weeks. No, like you can't. He was probably like, who knows? I'll never. I always kind of want how much of that 42 million was margin. I don't know. You could tell me 10 million, I'd probably believe it. I think he was in a lot of margin. So that's I think that was part of the panic selling. He knew if things started turning, if you have a lot of margin, if people don't know, like things or leverage, margin, leverage, whatever, like things go bad real fast. Look, the Huang effect, right? The dude that did the Paramount deal, 9 layers or something of leverage. Even the slightest move on the stock price just like causes devastation. Yeah, even the 2 days prior, he was saying bye, bye, bye while sweating. Like, there's something in there. Like he was that 42 mil. There was tons of margin as soon as the things turned. So even a little turn would have devastated his portfolio, and he sold it all. I've never heard of anyone selling the whole portfolio. Yeah, you might know. I don't know. I don't know how much. I mean, you can do the math of how much margin a company will give you. But dude, panic, no doubt about it. Levered on fake butter. I thought that was a great opportunity to ask him that. I was like, oh, let's see. Let's press those buttons. Okay. Let's go to the next one. Let me pull it up. Okay, this was disgusting. I should I'll link this below if you're cool with the echoes in my comment. Like I've never seen the like the blatant. I don't even know. It just was disgusting how he acted. And I'm a mod. Like when Echoes use, I'm a mod for Echoes. So I was there most of their live streams. So I've seen. Like, I'm like I got most of the story on this stuff. Following me, meet Kevin for 2020. I was on live streams when he interviewed him. So it was modding when people would say crazy shit. This thing was nuts. Like he came on this interview just drunk and like on medication or something. I probably think this is probably actually who Meet Kevin is. The real Meet Kevin is this guy, not the smiling showmanship dude that wears the vests with the little Fred on it. I think this is who he really is. It's my opinion. But here's this part in particular.
Why? Well, the reason that I drink is solely because of this word right here. I have massive anxiety problems. I don't know what the fuck is wrong with me, but I have been to a throat doctor because I've thought I've had throat cancer. I've been to a heart specialist because I thought I was going to have a heart attack and die. I've had chest pain, throat pain, headaches, everything. Everything under the book that basically says I'm going to die. And all of the doctors tell me, Kevin, you have anxiety. And so what solves this for me is alcohol. So I drink alcohol at the end of the day. I don't drink to get drunk. I drink
There's no way it's at the end of the day. I'm telling you right now.
to take the edge off, to relax, to be with my family, and to stop thinking about work, and to just settle down. Some people don't like alcohol. That's fine. Some people don't like women. Some people don't like guys. That's humans. Everybody has their preferences. I like having a little bit. I don't mean to get plastered or drunk or wasted or blackout or hangover drunk or whatever. And so what happened in Florida is basically I went out with.
All right, and then you can find on your own the DUI when he got pulled over, which he didn't get a DUI. It was charges dropped. But like this is nuts. I couldn't believe he went on. I don't know. Part of what makes like someone like Sam Bankman-Fried or maybe Meet Kevin is like they think they can convince you. They're narcissists basically. Potentially, I don't know for sure, but like they think they're so much smarter and they're more convincing, and they can just talk the right of any problem. It's one symptom of people like this, and you saw that was with SBF when he took the stand at his own trial, which was just crazy that he took the stand. And but that's what these type of people, they think they can just talk their way out of anything, and they don't think there's like repercussions to what they do. Like they're smarter, better than you is what they think. And he shows signs of that. Like, oh my God. I know Echoes thought that at the time. Like, holy crap, this dude. Just you, if you watch this, I mean, unreal. And this is a man that, you know, like he takes people's money and invests them for them. Like if he was just a YouTuber, fine. But he's selling courses, he's taking people's house hack money, he's running an ETF. He is running it. The paperwork says you can't just say, oh, he just slapped his name on PP. No, he's running it. It says in the filings he's running the day-to-day operations of it. There's nothing to indicate that he's just put his name on there for licensing. So that's that dude. Like, it's unreal. He's still out there, and he's got some new scheme. I think he's hurting bad for money, probably. I mean, okay, one more. We have to do one more for Echoes. I'll have to I'll send all these his way. So this was hilarious. So I obviously I can't get the paperwork because he deleted the video. So he took out a loan for the jet. I'm sure people are aware of it. So he took out like $10 million loan on that jet. So this goes into the thesis like his ETF is not really producing money. The percentage of their cut is like nothing. It's very minimal. So you could see what's his payment? I think it was 17,000 or oh no, oh God, 70,000 a month. 70,000 a month is oh, that's a bad face. Sorry. Oh no, sorry. So 71,000. So like, my God, this guy, I'm just going to save this just for my own record. So there you go. He took $10 million loan out to buy a plane. And let me tell you, and he bragged about that I think Strongman did a good job about it. Like he expensed the whole plane the first year. Not to so like the IRS allows you to do this, which I think they've changed that rule. So you can't 100% expense these things now. I think it's like 80%. But look, there's repercussions to that. The idea is when you depreciate an asset, so you take the plane and there's a schedule, you depreciate it as it goes. When you sell it, the value the sales price minus your depreciation creates capital gain or loss or whatever. So he totally depreciated the asset or like right away. Like he's going to get taxed on that. Like even if he just gave the plane away, he really screwed himself on that one, I think, in the future. IRS is very aware of this, I'm sure. But so there's that guy. All right. The last part I was going to cover was Kingdom of Finance. So I'm sure you all want to ask me tons of questions on that, right? You all really care about Kingdom of Finance. Ask me whatever you want. But I last time I talked to him was like a month ago, I think. Where's his channel? Oh, that's right. So this is his channel. Present. All right, wait, hold on a second. This is his channel, so you won't find Kingdom Finance. He's going to do fantasy sports, which I know he likes sports. We talked about it in the past. So let's see. Any other questions? All these video live streams, Echoes were crazy. Credit. Yeah. Echoes. If you go to Echoes channel, just search Meet Kevin. You'll find a lot of stuff on like just craziness. And then also Strongman's channel. Side. Oh God. Oh snap! Kingdom of Finance. So, oh look at you, Kingdom. Oh, Kingdom was. I was like, wait. He wasn't fucking. Oh, I get your joke. Kingdom was the exit liquidity. Ouch. So like, look, I don't like to be mean. Like, if you're not selling a course or something, whatever. It's just your opinion on stocks. So, like, making stock videos. He's not selling a course. I mean, whatever. I guess I make a little fun of it, but we can all be wrong. I think it's just the pressure. If you're going to create a YouTube channel and you decide you're going to be valuing stocks, I think that's a problem for you as the YouTube creator, because now it's just this cycle. Like if you just get in this path of you take a company, you talk about it for 10 minutes, you spit out a valuation, and then you go to the next company. I don't think that's a sustainable model of doing this YouTube stuff. And I've seen other channels that have died doing the same thing. Um, there's also the single stock channels, which I think are a bigger problem than that, honestly. But yeah, it's I don't think it's sustainable to just, I mean, yeah, at first you think, oh, this is easy, man. I'll create the my DCF model. I'll just look at their presentation. I'll say some bullshit for 10 minutes for ads, and then I'll close it and I'll just move on to the next stock. Easy peasy. Boom. But eventually it's like, where's the value in that? You don't really actually like analyze or provide value, I don't think. And then there's not that many interesting opportunities in investing. I will say that. I think you've heard me say, most of this year I've just been buying my ETF. I wait for opportunities to present themselves, and like I saw a lot of great opportunities in the fall of 2022 during the currency crisis. This year it's mostly been ETF buying. I've seen a few things I thought were interesting long term, like Cigna. Other than that, I've just been buying ETFs. I'll speculate short term, but I've been honest about that, which I don't think most YouTubers are. Like if it's speculation, I'll tell you. Disney's a speculation for me, which could be, I could hold it for maybe 2 years, something like that. I'm not going to bullshit you that it's long term. So I don't see a lot of great individual stock opportunities to hold long term right in the market for someone like me, my type of investing. So to do single stock only videos, it's just, you're going to burn out. I think it's pointless, and eventually you'll stop making videos. But as far as like his stock picking, he seemed to like someone would come up with an idea in different discords, Jesse or me. We would come up with a good investment thesis, and instead of debating, like if you present an idea to me, I'm either for it or against it. Like that's all I'm thinking. Do I want to ride with you or not? He was like, oh, I like your idea, but now I'm going to find like another company that does the same thing, and I'm going to show that. And it just was always odd. He did that repeatedly. That was like Jesse and me were big on Cigna, and then he pitched Elevance, and we're like, where does this? Shouldn't we be debating whether Cigna is a good or not investment? Why is Cigna involved in this? None of us were talking about it. And then Paycom, he got wrecked on Paycom because people were talking about Paylocity, and then all of a sudden he starts talking about Paycom, which nobody had brought up Paycom as an investment. It would be like if I talked about Carrier as my thesis, and then he all of a sudden like would bring up some like Lennox or some shit. And I would, if he did, like, let's say hypothetically, and it's like, we're talking about Carrier, like a commercial HVAC heat pump company. I don't want to fucking talk about like a residential heat pump company. And that, it was just like, that's type of stuff. I'm not going to say like stock, like, look, it's a lot of people right now are realizing, and the SoFi, and there's some other stocks you've seen, Trade Desk, these stocks that are at huge PEs. You like the expectations of growth are perfection or accelerating, and when that narrative gets a dent in it, they get wrecked if those rapid growth stories go away. And that Paycom was a typical example. Great growth the last few years, high valuation, which means the market expected a continuation of what that was doing. And I could show the charts about growth compared to valuation of PEs. So he had a lot of those types of stocks. I noticed that he was like looking at, which other YouTubers do also. They just assume the story will continue forever. Valuation, I don't know. Like I don't think like that. Like if Peter Lynch is so ingrained in me. If I see like a 40p, 50p, I'm running out the door. Like immediately, I'm running out the door. Especially if people talk about the stock. So that's what I think about stock picking. I mean, nobody's perfect. Like I'm down on Crocs right now, but I'm up on Disney and up on Carrier and Trent. So it is what it is. I don't think you should be all individual stocks. I used to be. I am adapting to more of an ETF with some choice stock investing, which I think is a way better way to do it. That's why I'll continue to preach that. I think you could find opportunistic investments, based on your competencies. And I've seen people do this in different discords I'm in, where they use their experiences, their profession, maybe people they know, to find companies in their space they're comfortable with and make really good investments. I've seen it a few times now. I'm like, that is what you can do as retail. You're mostly just the whole market as a core, and then you can make these choice selections. Like but like Kingdom did, like the other thing, he got really excited when things were going up, and when things went down, he kind of panicked. When things would go green, he would sell them like right away. I noticed that he had a few like Meta and a few other. He had a few stocks do really well, and then he sells them immediately. And I'm like, this is a typical retail thing. They panic when it's red, and then when it's green, they also panic, honestly, because they're so afraid of losing those gains. So that ends up hurting your returns. I'll also be curious why exactly he quit and rebranded his channel. I think it's going to be frustrating with the channel growth. What happens? I don't believe he just got bored. If he had invested in the companies that he told us, he's having a really rough time right now. Some of the stocks that he had talked about that he liked have not done well recently due to their high expected growth, and maybe some of them had dependence on borrowing money. Interest rates would kill them. It's 50% Crocs. Oh my god. Oh my god. I can't even imagine. Yeah. But I again, like I would encourage you people, like, don't go on his channel when he starts making videos, and don't attack him. Like, come on. Like, he didn't sell a course. Like, he started Discord. He didn't even charge for his Discord he created. I don't know. Like, what else do you need to do? Like, look, like, I guess the Kingdom versus Strongman debate. So I've told Strongman this. It's not a secret. Like, I prepared Kingdom for the debate. Well, it wasn't my idea to do the debate. He wanted to, but I'm like, well, if you're gonna do this, then like, let's prepare. Like, I want an interesting debate, because I boring debates, who cares? So I wanted to see like a real debate between him and Strongman. I thought it'd be fun. So I gave him the materials he used. I didn't tell him to like talk about VT as a day trading. He went off the rails like halfway through it, and I don't think he really prepared for that debate. I think he just thought he would just outsmart Chris. I don't know, but man, that was rough. Like, I can have like Chris and me talk about this. Like, we might have a real debate about I don't know if it'd be SC, maybe dividends versus VT or whatever. I would more be like US versus global, but like, yeah, not like a dick like that. There are concerns with certain types of, like, there's certain types of risks with any investment style. It's all about risk mitigation. So yeah, I don't know. I mean, it was combination. I mean, Chris got him. I mean, what else you see? That video was devastating. When that thumbnail, I was like, holy crap. Like, I can't even imagine that when he did that one thumbnail. It's like the other thing that ended, well, exit liquidity, I can say for me, probably I don't know about Jesse knows, but like when we interviewed Ryan, and then Ryan interviewed Lafufu, Jeremy, and we're just like, oh, so this is what's going to happen if you have a channel where you interview people on YouTube. Eventually, those people you interview are going to do something degenerate, and then now you're attached to them. So you've interviewed somebody, like if Staccato, we interview him, and then all of a sudden he becomes like a penny trading crypto dude afterwards or something. You know, it's like, what the hell? Like, so it's kind of a bummer when Ryan interviewed Jeremy afterwards. And, you know, we liked him at the time. I think he's a fine person. Ryan's fine. I don't have a big problem with him, but that was a bummer for me. I kind of, when that happened, I was pretty much ready to be done with that whole with the podcast, because I'm like, I don't want to interview somebody and then they go interview Meet Kevin or something, or I'm not going down this road. So long period trade desk. That's why I mock everyone. Oh God. My only problem with Kingdom is that he was blocking people. He was, when he started his Discord, he blocked people right from the beginning. Didn't even give him a chance. Like, yeah, he did, definitely. He couldn't take criticism. Yeah, I mean, pretty much. If he, he didn't want to hear it, he was blocking people kind of left and right after a while. Um, yeah. I mean, he dished it pretty good. Like, if he didn't dish it like he did, and people talked like, fine, if you're not insulting people and they're harassing you, that's like harassment. But yeah, he was like actively insulting people in Discord. I mean, he was. I don't know if he thought it was ball busting, but some of the things he said, I was like, it's very hurtful, or not even a joke. Like calling people names, and I don't want to get into what they were, but oh, I think Kingdom was going after Strongman was a big mistake. Yeah. Okay. So like, I'll do. I will do a ETF review of SCHD, SCHG, because I hold them both in my Roth. I'll do a. I don't know if I told him I had SCHD in my Roth, and then he started loving it. I think after that, I don't know, like if he actually bought it or if he was just kind of latching on. He wanted to like get friendly with the Dividend YouTube community, which was big into it. Like I'll do a video of them both because I buy SCHG and D as a proxy just for the US market. That's really all it is. It's just another way to invest in like it's an equivalent to like the S&P 500 to me, because I have an S&P 500 account in my 457B. So it's just another way to, trade or invest for the market. But I think he was just talking about the dividend one. Like when I see people just buy SCHD, I think that's a terrible mistake. It's not diversified. To me, it's a satellite holding. That should not be like a huge holding in your portfolio. It's only 100 companies. Um, so I don't think it's the greatest methodology. I think it has a place, but I think people are embellishing what it is. I think people don't fully grasp what SCHD is, and they're not using it properly in a portfolio. And I would say Kingdom misrepresented it too, and he thought it was like the best thing since sliced bread compared to VT. So that was a mistake. It was a big mistake. So, um, he has no financial background. I don't think he does. I don't know. My only problem with Kingdom is that he was blind. Oh, you already said that. Sorry. These videos for him. Got what he deserved. I mean, if he did hold the companies that we think he did, I mean, like the funeral home company. I was like, you're really gonna buy a funeral home over like, I don't know, some sort of index fund? Like, I don't see it. Fantasy might be worse. I don't know. I don't watch. I do sports betting. I don't do fantasy. Any chance if Kinga came back, you would all want to do I don't know what I'd collab on. He's not doing finance anymore. He's doing fantasy. Like I said, when he starts making videos again, I mean, he didn't personally hurt any of you. So I think you should, if you don't want to watch his fantasy stuff, just leave him alone. I don't understand. You're gonna like now if you're gonna go on his channel and constantly comment. I mean, you're harassing him now. If he busts your chops, fine. But um, we can all just move on. I mean, he didn't take anybody's money. You've got to review VT. Oh, I have been looking at it. I'm talking to Chris because I thought it was. I'm in his Discord, so there's no other ETF like VT, which I found very interesting. Like there literally is I couldn't find anything else that holds the entire world. So now the global ETFs are new to me. So it's kind of interesting, like to talk to him about it. And I understand we met, so I don't know if like we had dinner when I was down in Virginia Beach. So I heard him talk about why he picked VT. It was interesting. So I told him at first I thought he like got wrecked in the beginning, like I did. I got wrecked by the tech bubble, which kind of really changed how I thought about stocks. So I thought he must have got wrecked by like tech investing, and then he just did the safest thing like VT. That's not true. No, that's not what happened. He literally always has been. So, which is interesting. But I'm not like the Boglehead stuff's kind of new to me, honestly. I don't research, like I'm not that researched in a lot of different stuff till more recently. So I appreciate the Boglehead idea. So as I get closer to retirement, I'm probably getting more towards being a Boglehead index investor, honestly, kind of going that way anyway in general. Dan got wined and dined by a dude named Belly. Dude, the place we went was pretty freaking sweet. Man, I tell you, Virginia Beach, that area, Virginia Beach, Norfolk, pretty damn cool area. If you can vacation there, I really had a blast. It's not that hot. Great beaches. There's lots of stuff to do, especially if you're a military type person. Norfolk's got some killer friggin' restaurants downtown. Oh, yeah, he gave me some good recommendations. It was fun. I don't know. To be honest, a strongman would have held in. Um, oh yeah, he did buy Intel and then he sold it. Yeah, I mean, I wasn't a big fan of Intel either. My whole thing had been to wait until they got closer to the fabs being built to think about investing in them. Um, right now they're being priced like their turnaround's going to happen. So I don't know. I think the stock price got ahead of their actual rebuild plan. But hey, that's how the markets work, right? If people are confident, the markets are confident their plan will happen, then the price will represent that, which is what it kind of seems like now, which I'm not as confident in Intel's rebuild plan as maybe Disney's, depending on the valuation. But people are odd online, like just because you like, I'm not interested now, I'll wait and see what happens longer. It's like chill, like, okay, I'm not saying it's a garbage company. I'm like, just chill the F out. Like I said, I was interested in TKO Holdings, which, it got kind of it went down a little bit. I don't really want to get into this too much, but I was interested in TK Holdings in a video I did with Andrew, and this is my biggest concern. Oh, there you go. Yeah, one of my biggest concerns was that he's like the for life chairman of the board of this new company that's going to be the UFC and WWE, and he sells like a crap load of stock. So I'm glad I waited. I want to see like 2 quarters of filings before I think about it. And thank God, because stuff's happening like crazy at that company. Endeavor might look like it's going to get sold to like Silver Lake private equity, which kind of explains, I'm like, why would they do this deal in the first place? I thought it was odd. Like, why did Endeavor do this? Why didn't they just keep it all in house under Endeavor? Why did they spin off into a separate company? Now it makes sense if Endeavor's plan was to go private, because the valuation, that thing has not done well in the markets. And then maybe they just wanted to spin off what they thought was the valuable assets that could actually appreciate. So kind of cool. But that's why it's like, this is why I don't do individual stock per se. I'll talk about them in a live stream, but I'm not going to do like what Kingdom did. Like, I'm not going to do dedicated 10, 20-minute videos on an individual stock, because it's like, come on, like, I don't want to. The ETF reviews are great. I think you can learn something from those. I'm gonna start losing people here, but I think the ETF reviews, I think, are more useful to you as an investor, and I'll try and find ones that have interesting methodologies that you can grasp something from. Like, does moat matter? I'll probably do more on the moat one. So like, I didn't really understand all the background of moat till I did the review, because people use that ubiquitously all over the internet. I'm like, what that? Why does everyone call everything a moat? When you start looking at it, you're like, oh my God. So now I understand the background of moat. And now it's like, okay, does it matter? It's like, I don't know. But I'd like to have maybe a more of discussion on moat, because I think that's interesting. More interesting than free cash flow from cows. But anyways. Let's see. Bogle investing only works if you commit a DCA sadly. Yeah. And I've talked to people, it's like, you see online, it's like the general trend, the markets over time. It's kind of interesting topic. Like, the markets over time, if you buy the market, goes up, but individual stocks, the studies have shown the propensity is to go down over time. So you're like, that's really confusing. Doesn't make sense. If the market's going up, surely the stocks go up, but no, the market goes up, like the basket of 1,000 stocks. But then if you look at those 1,000 stocks individually, most of them are going down or not doing anything. So it just reinforces that. And this isn't like the Magnificent Seven or FANG it's not new. That concept of like a very small handful of stocks representing all the returns. And I get this more, that's the Boglehead, which kind of, I understand it, is that you don't know which of those like few handful of stocks that represent the gains of the market. You can't predict those. So you need to buy the whole basket so you have them. Magnificent Seven this year. So, if you bought the NASDAQ 100, you got more percentage ownership of those 7 stocks that appreciated than if you own the 500 stocks or the Russell 1000. But it's all the same theory, right? It's all the same theory. You have a basket. There's some little portion of that basket that will do really well, and it's in your basket. And you'll have less volatility if the basket's bigger. But I think you can do both. Like I said, I think you can hold the ETFs and you can make select choice investments. I think it'll work well for people if you stay within your competencies. I think you do fine. I mean, I've seen it. I've seen people do really well that way. Yeah. There's rumors Seiko's going private again as far as events, not a creative team. Yeah, dude, it's like drama. And that was some of the concern. I think I know I talked about this with Andrew when I mentioned that stock. I'm like, Vince is like, there was like a whole page of their filings that documented all of Vince's like run-ins with the law, sexual harassment claims, all of that stuff. You're just like, man, if you buy this, you're in business with Vince McMahon. He's not leaving. So that's why I was like, you know what? I want to see 2 quarters of filings minimum. Not the freaking when they do the merger, they do like, it's not real filings. They go back in time and they try and do a consolidated financial statement. But like, that's not really accurate. Like they might say when we merge, we're going to save a bunch of money from less administrative costs. It's like, okay, but you're not going to see that till you actually have those filings after they merge. So it's a good, yeah, I'm glad I'm waiting. I mean, it's still interesting because I think it could be a free cash flow machine if they actually could operate. And if Vince McMahon could not be a lunatic. But hey, people buy Palantir and freaking Alex Karp is a lunatic too. So I guess it can work. I mean, that's the stuff that's interesting. Like it's worth a shot. I could double my money on that thing. If I'm not saying I'm going to buy it, but that's worth thinking about more than debating if you should buy more Procter and Gamble or something. like bro, or those YouTubers that want to buy like Realty Income. I'm like, Jesus Christ, dude. Like, just buy the index. If you're buying Realty Income, I'm like, just buy the index. This is not going to perform. Maybe you're breaking even on performance at best with that thing. I'm like, a lot of this is just you're wasting time looking at things that have no chance of outperforming. And I mean, blah. Wait, what did he say? I firmly agree with your ETF reviews, providing a lot of value here. There's so many ETFs, and I know there's not a lot of YouTubers do ETF reviews. And but actually, what drives me nuts? Okay, they don't look at like the prospectus. They don't do any background on actually the methodology they're using in these ETFs. If there's any research on that type of investing, like historically, it's just they look at like the price chart. They read the summary prospectus, which is like a page. And then they go do like a historical price on the freaking ETF. I'm like, what value are you providing to people on YouTube? But hey, you know what? It's just like the stock videos. You can slap that, do a 10-minute video like that, and you can just pump out like 100 ETF reviews that all look the same and they don't provide any value. Like, but it is what it is. Like these, like my cows one and the moat one took me days of research and then preparation. So I can't spit these out. So that, for YouTube, that's not great. I'd be better off just doing cookie cutter 10-minute ETF reviews and spitting them out. Like some of these covered call ETF review people I see now, where they're pumping out these reviews and they don't provide any value for you, which is a shame. But I'd say like a lot of YouTubers are just doing finance because they want to be YouTubers, and this is a popular subject. I want to be a finance person. Like I don't really care. I don't want to talk about anything else. So, fishing my bang streaming. Oh, thank you. I don't think I'm going to be some grifter slayer. This is all recorded now, so I can have this on my channel, whatever he deletes. I wish I'd saved more of Meet Kevin's videos. I don't follow him anymore, so I don't know what he's going to do unless someone mentions it in Discord. I want nothing to do with that person. Like, who's more clownish? The dividend guys who own 48 ETs or the 29 dividend? Okay. Oh, like, I'm trying to. That's a tough call. like you got to understand, like a lot of dividend investors probably got wrecked by like tech stocks, and then they feel conflicted and they don't know what to do. And it seems like buying an ETF and just putting money into some boring ETF is hard for some people because there's no return. You just dump money in this basket and you're not going to see anything till you retire. And I think that's difficult for some people. That's difficult. You want some return or something you can see confirmation that you're actually getting ahead in life. And I don't know if that gives them that, but a dividend investor, you're going to get increasing dividend payments year on year, because you just, unless you're a complete like ass of an investor, as you dollar cost average into your portfolio and your dividend stocks, you will see more dividends every year. So it's a tangible, attainable goal that you can give people in investing. Um, and I think people like to throw like, oh, I'm going to take the SP 500 and compare it to this. It's like, no, you should be thinking about investors comparisons, because nobody does as good as the index. Even index investors don't do as well as the index. Everyone fails in investing in some way. So at least dividend investors at least have a system where they are encouraged to buy on ups and downs. They're actually more encouraged to buy when things go down. They can see the benefits by the dollar amounts in dividends coming in, and it keeps them excited and interesting in investing. And then, like the stock picking portion of it, I think they'll just get better at it over time. I got better at it, I think, but I started out with like Verizon, Altria. You go for all the high yielders because you think that's the way to go. And I try and say like if you're like 22, it's like, why are you buying Altria and Chevron and this shit? Like you should be looking at stuff like Carrier. You should be looking at stuff like KLA and Lamb Research, like even W Granger, something like that. Or like those, you're missing the point of this style of investing. Um, and it's hard because you want huge amounts of dividends, but you don't have a lot of money. So you don't see it at the beginning and you don't understand what a snowball is. And it's going to take 10 years to get going. So what do? Now they have these predatory ETFs that are doing these covered call strategies because of JEPI. The success of JEPI and JEPQ has caused us to have this plethora of covered call ETFs. And I think they're predatory as hell. Those people are salesmen too. They create ETFs that people want. So they're creating this huge amount. Just every day another covered call ETF, and it's all the same. It's some dude sitting in an office trading options for you. Like that's all they are essentially, and they're all going to go the same way over time, just down. Just math is not in their favor. The math cannot work long term in these covered call or put strategy fucking funds, because you're selling upside or potential loss. You're selling upside on investments. So over longer periods of time, that will just show in your returns. You will not succeed. But their hope is, if it gives me a 20% yield, I'm hoping I'll get my money back within 4 or 5 years. And then everything else is gravy. It can go bankrupt. I don't care. I got my money back. That's all I care. Anything beyond that, I'm good. That's probably what they're thinking. And it's a line of thinking. You can go look. Steve Bavaria's book, Income Factory, is pretty much what that preaches. That style of dividend investing, where you don't care about the assets value. It's just about the cash in your pocket. There, if you tell, all I would tell your friend, like, I don't, covered call ETFs are okay. I won't be mean. Like, they serve no purpose in your portfolio unless you're retired. And even if you're retired, I would question why you even have them at that point. I'm not retired yet, so I could maybe see them serve a purpose in a retirement account, given certain macro environments. But if you're not retired, why do you own covered call ETFs? Like I don't understand. They don't appreciate, like, if I was to look at, like, I think this is one. Now I'm gonna have to add topics to the dang discussion. Okay, this is one of them. And do I have the dang? It doesn't have the. Okay, dividends. That's why we say dividend growth, because if it doesn't grow, then cut it. It's not part of your investing. Okay, 20 cents. There's no growth here. It's just like a covered call strategy. What's another good one? SPPYI. This is another one. Again, like there's no. This one's degenerate as hell because they're returning in cash back to you. Like, I don't know why they would. Ugh, so gross. But there's no growth in these things because they're only giving you your premium back. But if the price goes up, then they're losing value of the assets that they're writing contracts on. And it's just going to be this just deterioration of value over time. And it's just going to happen to all of them. They're all going to go the same way. They could have brief periods where they could do well. Like SVOL has had a great year because like low volatility benefits this covered call strategy. So it's actually done very well this year. Like that's pretty damn well. Almost 17% yield, up 4%. That is great for something like this. But this is perfect environment this year for this one. It's going to get wrecked. So covered calls just underperform the market when the market is going up and underperform when the market's going down. Just having cash. Yeah, like go look at compare Tesla to Tesla, right? Like you can look like God, those yield max. I hate the YouTubers that do those. I can't I watch their videos. They don't even know what they're buying. All they talk about in the video is like the yield of it. That's it. I'm like, you guys suck. Like this is not investing. So like if we do year to date, I have to do God damn it. I hate how they default to price return. Okay, let me do it again. So it's like I just don't see what the point is. Like here's Tesla. Like okay, so why don't you just buy Tesla? Like why? Why are you buying this thing? Like, oh, I'm getting distributions. I'm like, well, you got half the return if you just bought the stock. Why? Why are you buying this thing? Just buy Tesla. Like I hate to say it, but like what are you doing? And it came out with like a 60% yield, I think, the first time it came out. So like let me see what the dividends look like. I'm sure they're Jesus Christ. Look at that. All over the place. You notice the trending down though, right? Like look at it. 90, 90, 80s, 40s. Oh, we're dropping. We're dropping. So we were at almost $1. Now we're going to 50. They all will go this way. Please don't buy these things, people. Okay. So any other questions? I'm gonna have to add that we talked about extra stuff. Maybe I'll split this up, but wait, what the hell is that one? Oh, I've already talked about that. Yeah. That wait, is that Tattooed Chef? FQY. No, I don't see it. Like is it like yeah. Let's see. Some people invest in Direction as an actual holding. Oh yeah. Yeah. I mean, literally, if you read like the Direction, their prospectus on those funds, they're like day trading tools. The stuff they put out. So it's like if people say it's a trash investment, I'm like, it serves a specific purpose in the market. Like people are not using it the way it was intended. To say it's garbage, I'm like, no, it has a purpose. Like these 3x bull bear things, like in these zero, like I don't know, they're there. They have a purpose. You're just misusing it. A lot of people, but people like Dividend will only yield chase or hurt themselves benefit. You're shorting your future. Like the whole point of Dividend. Some people really make sure they mention like X-Gen Dividend Investor is a perfect example of how you should do it because he buys and he has great dividend growth investments. And the reason he does is he's retired and he had $100,000 dividend income, but now it's like 120. It's growing. And if your only way to grow your dividend is reinvesting the dividend, you're failing because at some point you need to turn off that reinvestment and just take the money. So the whole point is that you get dividend growing companies so that you turn off the reinvestment, goes in your pocket, the dividends continue to appreciate. If you buy a bunch of things that only go up 1 or 2% a year, you're now losing value to inflation and you're screwed. But anyways, that's my opinion. No, I'm cutting that out, Bacon. We strike that from the, we can't say that. Oh boy, what have I done? That's a great, like that Tesla one. My God. They're all going to do the same thing over time, just a slow, painful deterioration because they won't benefit from all the you're selling upside for premium and those upsides you need. Look, XBI. You've got me on a friggin' hunt, I'm sure. Someone wanted me to invest in Goth. Oh, that was probably you, which I wish that was actually an investment. I'd probably buy it. Oh, fucking biotech. It's down over 5 years. Trash. I'm late, but I made it. Well, I'm cutting off because I said my piece about the clowns. So, I think we're doing a live stream Tuesday. Still working out the details with Jesse and Fabio. I think. I'm not sure about topics. I don't know. I was watching football all day. I'll bash Cybertrucks if I can. I've got some good Cybertruck stuff actually. Maybe I'll do that. So, with that said, thanks for listening. Only thing, please don't give money to Meet Kevin for your own benefit. Or do it if you want, a guy running 4 or 5 businesses full time and stressed out of his mind because it's all friggin' such a mess. I don't know. We were watching in the morning. Thanks, Dan. Thank you for listening. And for Veterans Day, we will do the veteran outro, which I got from a guy in Discord, but he said I didn't have to put his name on it. But if you're listening, thank you for my favorite outro. So hope veterans had a happy Veterans weekend. So I did. All right. And we'll see you later. Bye.
Nice coat, white coke, how you live with that smoke? Hop in, jog in, I'm just kidding, I'm broke. Sit a lot, I've been waiting.